Let's be completely honest about what's happening in the Greater Toronto area right now. If you bought real estate between 2021 and 2022, your property value has dropped anywhere from 20 to 40%. That King West condo you purchased for 920,000, it's worth 680 probably today. That Oakville pre-construction townhouse where you put down 200,000, project cancelled, deposit in limbo. I'm Jyoti, a realtor with Engel and Walkers working across GTA, and I have watched dozens of families in this exact situation make one catastrophic decision that destroys their financial future permanently. Today, I am sharing why smart investors never sell low, the rental arbitrage strategy that's keeping families afloat, and the one asset no market crash can ever touch. Here is the reality check nobody wants to hear. The Bank of Canada raised interest rates 11 consecutive times. Your mortgage payment jumped from 3,500 to 5,200 monthly. Meanwhile, your property value dropped by hundreds of thousands of dollars. You are trapped in negative equity. You owe more than your home is worth. And this is where most people panic. They think, I need to sell before it gets worse. Cut my losses, move on, start fresh. This is the worst financial decision you can make, period. Why? Because the moment you sell, you convert a temporary paper loss into a permanent realized loss. You lock in the damage forever. You walk away with nothing, or worse, still owing money to the bank after the sale. Real estate is cyclical. The GTA has recovered from every single downturn in history: 1989, 2008, 2017 cooling period. Every time the market came back stronger. This time is not different. It's just painful right now. So, what do smart investors do instead? It's two-part strategy that require you to think like a wealth builder, not a desperate seller. Part 1. Do not sell your property. Your real estate is still an asset. Even underwater, it has value, even cash flow negative. It's building equity through mortgage paydown. Even in down market, it's a tangible asset that will appreciate when cycles turn. Part 2. Rent it out and rent for yourself. I know what you are thinking. Jyoti, we bought this condo planning to upgrade. We have 2 kids now. We need more space. We can't stay here. Perfect. Here is the play. Rent out your condo, then rent a larger house for your family. Yes, become a renter while being a landlord simultaneously. Here is the math. Your downtown condo rents for 2,800 monthly. Your mortgage payment is 3,200. You are covering a $400 shortfall out of pocket. Meanwhile, you rent a 3-bedroom house in Brampton or Vaughan for 3,400 monthly. Way more space than you could afford to buy in this market. Total monthly cost $3,800. That's the 400 shortfall plus 3,400 rent. Compare that to selling, losing 200,000 plus in equity, permanently destroying your credit, having no down payment, and trying to buy a bigger place in this market. The rental arbitrage strategy keeps your asset working for you while giving your family the space you need today. Let me walk you through a realistic scenario to illustrate how powerful this strategy can be. Picture a young family who bought a King West condo in February 2022 for $920,000. By summer 2023, it's worth $650,000. They are underwater by $270,000. If they panic and sell, they lock in that $270,000 loss permanently. Game over. But what if they implement the rental arbitrage strategy instead? They rent out their condo for $2,600 monthly, covering most of their $3,100 mortgage payment. They rent a townhouse in Brampton for $3,200, giving their 2 kids proper bedrooms and a backyard. Now, here is where this scenario truly becomes transformative. Instead of obsessing over property values they can control, they redirect that mental energy into the one asset no crash can touch: their income. She upskills in tech project management through online certification. He gets his real estate license and starts building a client base. Within 18 months, their combined household income grows from 110,000 to 280,000 annually. Fast forward 3 years, their condo has recovered to 780,000. Their mortgage is down to 820,000. They are almost at break even. But more importantly, their 280,000 income means they can now afford to buy their dream home in Oakville while keeping the condo as a cash flowing rental property. This example shows how you can turn a crisis into a two property portfolio by focusing on what you actually control: your earning power. This is about more than real estate strategy. It's about how you respond when markets turn against you. The GTA luxury market will recover. History proves it. But your income? That's the variable you control right now. Stop obsessing over property values you can change. Start obsessing over skills you can develop and income streams you can create. Take online courses, get professional certifications, switch to higher paying industries, start a consulting side business, network aggressively with decision makers. Every dollar you add to your income is a dollar that market can never take away from you. And here is what happens. As your income grows, that $400 monthly shortfall on your rental property becomes insignificant background noise. The negative equity becomes a temporary inconvenience, not a financial disaster. You're building wealth through income growth while your property quietly appreciates in the background, waiting for its moment. If you're sitting on negative equity right now, feeling trapped and desperate, I want you to know you have options. Better options than panic selling. Don't make the emotional decision that locks in permanent loss and destroys generational wealth. I work with families across the Greater Toronto area, navigating exactly this situation. We create customized strategies based on your specific income, your property type, and your family's goals. Book a call with me with the link in the description below. Let's map out your personalized path forward together. And if you found this valuable, subscribe to this channel. I share real estate insights for the GTA that go beyond the surface level advice you see everywhere else. The market is brutal right now, but your response to it will define your financial future for decades. Let's build that future together.